Hello everyone, I'm Dumitru Condrea, CEO of NovaFin, and today at our Fintech Garden podcast, we have a very unique interview and discussion about something that almost everyone tries to avoid. It's about the new financial crime, why static compliance can't keep up anymore, how to work with new compliance rules, how to work with new market requests, and how to keep everything on track. So today with me is a person who knows a lot about this and a perfect fit and a very good professional in this topic, Adam McLaughlin, and I'm happy to see you here. Adam, hello, how are you?
Thank you for having me. I'm really excited to do this podcast, and I'm looking forward to the questions you're going to ask me. So really looking forward to this one. So thank you for having me.
I just mentioned we have an interview, but mostly it will be a discussion. So feel free to interrupt me. I will feel free also to interrupt you. We just have to make a very live discussions, a very good one, and to try to cover a lot of topics today. Because 10 years ago or 5 years ago, compliance, financial crime, everything related to AML, KYC was a lot of different than it's today. People would just had sanction lists. There was very simple monitoring on the transactions that are happening. Countries, entities, financial companies were not so well connected between each others, even in the same country. And regulators had less tools to control everything. Today, as far as I see from my experience, things are totally different. If you just turn on a good instrumental, good tool for MLL, KYC compliance check and screening, you can find a lot of interesting things about an UBO or a director or anti-money laundering officer and so on. How, from your perspective currently, is the financial crime playbook is like? How is the KYC compliance work right now looks like?
I think you alluded to it, right? This isn't a new topic, right? This has been around for decades and decades, where anti-money laundering, financial crime, trying to identify the bad guys, has been around for a while. It all started probably sort of before that, but where technology started coming in was probably in about the mid 90s, I would say. And it's very much rules-based systems, right? It's very siloed, very rules-based. You had different vendors providing different technologies to banks, and they're really starting to move into that technology space. Regulators started catching up, and they started bringing regulation in where you have to understand your customer and do KYC. But the reality is, didn't really work that well. Like, just being totally candid here, right? It didn't work that well because you look at crime, you look at organized crime. It was on the rise. It was on the increase. It kept increasing. The criminals were doing what they wanted to do, when they wanted to do it, with who they wanted to do it with, and there wasn't really much of a deterrent with the banks because it's all very static. The criminals knew what the banks were looking for, and they just went around it, right? They just went around the controls, so they weren't really that effective. You roll on to the last, I guess, 3-4 years, and things have started to take a different tact, and it's really started to change the dynamics of what we're doing, right? Firstly, you've got a greater, I would say, regulatory focus. So things like, you've got things like FATF, who they're not a regulator, but they obviously influence government policy. They influence regulations because, they set the standards, and they obviously assess countries on those standards. And so therefore countries will generally follow more or less what FATF sort of recommendations and guidance is. But if you look at what they're saying, then you look at where the regulators are going with this, I think the days of having what I would call a technical compliance, which all intents and purposes is a tick box approach to compliance, right? Have you got a TM system? Yes. Have you got a KYC system? Yes. Have you got the people doing the work? Are you generating alerts? Are you generating SARs? Are you risk assessing customers? Like all that stuff, right? It was very much, have you got it in place yet? And tick a box. And what we're seeing and moving towards is now I would say it's an outcome based assessment, right? So all regulators are now saying, right, rather than just ticking a box and saying yes, we're technically compliant, but actually, what outcomes are you achieving? Are you actually identifying financial crime? Are you actually helping to stop financial crime? That is a new assessment and the new standard that is now being looked at on organizations in the regulated sector. That then moves into, what are the organizations doing today? And I think I alluded to that, right? Which is very siloed, very, you had a KYC system, but even then you might have 4 KYC systems in a big organization, right? One for retail, one for wholesale, one for investment side, and maybe one for trade, right? So you'd have different KYC systems. You might have the same customer across all 4 systems that never really talk to each other. Like the days of that happening is, I'm not saying over, because there is still organizations that still do that, and they're still trying to move away from that. But it's looking at context, right? Contextual monitoring, contextual understanding of your customer, because that's really where the power is, right? That's consolidated data, the contextual assessment. Because ultimately, I think the question we need to ask ourselves as organizations especially in the regulated space, the one question we need to ask is, do I understand my customer, right? It sounds like a really simple question. Yes, I do, or no, I don't. But obviously, there's a lot more complexity behind it than that. But that is fundamentally what we need to ask ourselves is, do we understand our customers and the people we're dealing with? And if we can answer that question, I'm not saying we're going to get 100% of the way and fully understand our customers, right? We're not going to have all the data available, but the further we can get towards that 100%, it makes it much, much easier to understand what is abnormal versus what is normal. Because look, the simple fact is, the criminals haven't really changed how they operated for a long time. Yes, there's new topologies that come out. There's one recently where the UK National Crime Agency had a crime gang that worked transnationally using cryptocurrency, but also using fiat. So they were taking drug money in fiat and then converting that into crypto, and then using the crypto to pay the sort of the cartels for the drugs, and using sort of cyber money that was generated from fraud organizations and fraud scam centers. They were using that crypto to do the conversion thing. So it's a very complex ecosystem how they operated. But the simple fact is they're still operating using similar modus operandi that has always been in place, just using modern methods and technologies to do that. There has been that shift, but it's an interesting move. And yeah, that contextual monitoring, I think, is the one that is really sort of, I'm seeing a massive, massive shift towards over the last few years.
I honestly consider, and this can maybe not a little bit mainstreamed vision, my opinion is, yes, we made a big shift. As you said, I agree totally with you. I mean, at least we right now have on the market different tools for KYC, and those tools in KYC, because they're on the open market and free market, they have to compete with providing different kind of features. They integrate a lot of data from different databases, from different countries. You can, do a lot of interesting things. You can make a lot of checks. You can make cross checks, because standardization appeared in United Kingdom, European Union, over the world. I mean, we have a lot of sanctions lists, but they're coordinated between them. We have risk zones. We have no-flight countries or no operation countries and so on. And a lot of things were improved. But in the same time, financial crime also evolved. I mean, those guys are the first one who evolve, the first guys who find the gaps. And I have the impression that, yes, we shifted, we improved ourselves. Financial crime, those who are doing this, also improved. So maybe we are now at the stage are winning the war, not the other side. The other side is also not winning the war. We just continue to keep the balance, between the good guys and the bad guys, or gray guys and, regulated guys. The single thing so we don't have to lie to ourselves that, the big shift is equal to a success. No, the big shift is it's equal to keeping the balance as the same it was 5 years ago or 10 years ago. Because what was valid 5 years ago right now is not any more valid. Regarding some, schemes or, workarounds, but exist another workarounds, new one that we still cannot work with. I honestly think that regulations and governance is still a gap for us, because they sometimes, or they over-regulating something and just, crash businesses, imply some stupid actions to be done by the business, or sometimes they're just not sufficient in time. They're just running behind the bus, behind the train to catch it and to apply some rules. I honestly think that today's gap is the governance. But someone said, I just had a discussion with one of my friends last days, and he said, I still have a feeling that the gap is in the data. So what do you think? Where is the gap currently in this fight and fighting the balance between financial crime and?
So I think let's take this back to basics, right? We talk about, I think we as an industry have a tendency to overcomplicate things. Like we go, we need to put this governance in place and this regulation in place, and fundamentally, what we try and do here, we're trying to stop criminals from committing crime, and ultimately not just committing crime, but also moving the funds, the proceeds of their crime. Right, that is the fundamental basics of what we're trying to do here, right? And yes, there's new schemes, there's new topologies, there's crypto now involved, but fundamentally, what is it we're trying to stop here? We're trying to stop movement of funds from A to B, but it might go through, to get to B, it goes through X, Y, Z, 1, 2, 4, wherever it goes. But A to B isn't a straight line. It's a convoluted line to get from A to B, but that's the fundamental fact of it, right? Criminals are still utilizing corporate structures, right? That is a decades old strategy, right? You look at some of the stats and some of the financial crime, things like Interpol and Europol bring things out. Like 80% of organized crime structures, gangs, 80% of them are using corporate structures as a primary source of fund movement, right? That hasn't changed. The fact that they weave in some cryptocurrency, the fact that they weave in different typologies and maybe some complexities, maybe some AI, well, that's utilizing modern technology, exactly what like we're doing, right? We are doing the same thing, as the good guys, using modern technology to try and fight them. But the reason I'm saying this, and this is important, because all they're trying to do is move A to B, right? The funds, and it's a supply and demand issue, right? The reason why they're doing that is because there's a demand for the goods that they're selling. Okay, that is fundamentally what is happening here. I think the gap here which exists in organizations is I think the big part of it is data, right? We have the technology, we have the, I think AI has improved hugely. Things like network graph technology, things like anomaly detection, joining the dots up. I think was actually two things, right? Two things that are missing. One is the data. I think sometimes we don't have the context available to answer that question. Do we understand our customer? Right? That question I asked right at the start, right? Having the data to answer that question sometimes is lacking. It's outdated. It's missing context, which makes it a lot harder. The other challenge we have, which the criminals don't have, is information sharing, right? We can have the best technology in the world. Institutionally, we have lots of contextual data about our customers, and we have AI systems. We can do KYC, we can understand our customers, we can do transaction monitoring, we can do ongoing assessment whether there's been a corporate structure change and changing customer risk. That's great, but the fact is criminals don't work in one organization, right? They don't put their eggs in one basket. They will operate across several different banks, even within the same jurisdiction, right? And spread the risk of their operations. Historically haven't worked bank to bank on a private to private information sharing. I think has been the detriment to us, because criminals can do that, right? If you want to work with if the South American cartels want to work with, the Albanian gangs and the Italians and the Chinese trader gangs, they can do that. They don't follow laws and regulations. They don't follow data privacy regulations, right? They just do what they need to do to manage and run their business. We have to comply with data protection and GDPR and other laws and regulations about sharing information cross-border and between also private, right? So I think the two things here is data and also information sharing, which is changing. You've got things like Article 75 in Europe. Canada's just coming out with new legislation to allow information sharing. US has got 314B. Like, we are starting to move the dial. So I don't think it's necessarily a technology problem. It's a data problem and a inability to share information.
Know your customer. You just mentioned about understand your customer. And I was thinking, maybe it's time for regulators to change in regulations and compliance, in laws and legals, and not to add only the acronym in KYC, know your customer, but they add the acronym as an obligation for entities to understand your customer, because you're absolutely right. We have to speak with our customers, we have to understand them. But I was thinking about the sharing of information between different countries. Yes, that's correct. Canada will be, starting to share with all around the world the information they have. And Canada has an issue with this. I mean, with a lot of things that are happening there. Central America is also make some movements there. United States, European Union, United Kingdom already did this. I was thinking, if we will gather all the data, well, at least we'll have via API access to different kind of data, and somehow with an AI or wherever tool, we'll be able to make the cross-checking. And I was thinking, currently, with having all these tools, all this access to information, are sanctioned lists a must to be checked? Because I still have doubts that someone who is in sanctioned list, he will go and open a company, because as you mentioned, everything or the biggest part of the things are done via a corporate structure. I'm more than sure they'll find some, fiduciary services or whatever, and they will just put the company on the name of another person, and they'll not be in sanctioned list anymore. Do we need a sanctioned list still?
What an interesting question, that one. Do we need a sanctions list? I think we need a sanctions list, because this whole thing, like whether it's about sanctions, whether it's about financial crime in terms of the cartels, I think one thing that we as the good guys can do is, I think we can add pressure to the bad guys, right? Whether you're on a sanctions list, whether you're a criminal, at this point is just something that I think about a lot, right? Is, are we going to stop people trying to evade sanctions? No. Are we going to stop financial crime and organised crime? Like, let's be honest with ourselves, right? We're not going to stop it, right? We're not going to suddenly wake up one day and say we've done such a good job, the technology's so good that there's no drug dealing, there's no human trafficking, there's no wildlife crime. I'd love to, there's no fraud. I'd love to be able to wake up and say that's all happened. But look, being honest with ourselves, the supply and demand equation means that is not going to happen probably in our lifetime. What we can do as institutions, as governments, as the vendor space, such as what I'm in, and the regulated sector, is we can make the cost of doing business higher. Right? If we can make the cost of doing business higher for these criminals, for people who are sanctioned, the equation of doing criminal business, maybe it still adds up, right? But to the end consumer and the end user, especially on the crime side, it starts becoming expensive. You have to start, if people are buying drugs and the drugs are like double or triple in price because the cost of doing business is higher, the criminals start losing customers, right? So that's one thing. Moving back into the sanctions space, like sanctions, it's still important to have a sanctions list because it adds the pressure to people saying that you are on a sanctions list for these reasons, right? So I think there's definitely a pressure element. It also, going back to my point, it adds the cost of doing business, right? So if I'm sanctioned, I can't just freely send money to the UK or Europe or the US. I can't do that. I can't, because it get blocked, right? So I've now got to find alternative methods and ways to move my money through the system to get it to where I want it to be. Right? That adds a cost, right? There is going to be a cost of that in terms of the transit routes for that money, which I'm going to have to soak up. Maybe it's not a high cost, but it's a cost nonetheless. So I think there's absolutely still a point in having a sanctions list. But I think what we need to start considering now as organizations, and if you look at some of the regulators and some of the guidance coming out, they are definitely along those lines now, which is evasion is now probably the biggest challenge now in managing effective sanctions, because the whole point of sanctions bit working is that you block the funds from moving into the Western countries where the oligarchs or whoever's sanctioned wants to do. They want their money in the US, they want their money in Europe and investments in the UK, right? But if they can't do that, it makes it a lot harder for them to make money, to maintain their wealth, right? That's where it hurts them. So a lot of them now using, like you said, third-party companies to transit the money through the routes of evasion. They're also using middle countries, what I'd call neutral countries. So there's countries in the world who haven't sanctioned Russia, haven't sanctioned Iran and other countries, but they still want to and have to engage in Western countries, right? They have to still engage with the US, UK, Europe, Australia, etc. So these countries are effectively a weak point, if you like, in the sanctions ecosystem, because they've got really good relationships and financial networks with the West, but they've also got equally as good financial networks with countries that the West sanction. So you have this dichotomy of problems where you've got this perfect storm, if you like. So it's really easy to use these third countries, put companies which are run by third parties who aren't sanctioned and move funds that way. I think this is going back to, I'm going around houses here a little. This is where technology comes into the fold, right? Because this is where you things like network analytics, pattern analysis, this is where AI can really come into its own, because it can start looking at analysis and analyzing these third countries, analyzing where the source of funds coming from these third countries, and start trying to identify patterns where there may be an association to a sanctioned person or entity that sits behind it. But going back to I've gone around the houses here, but your original question was, are sanctions lists still valid? Absolutely, I think they are, and I think they should still continue to be a useful tool, but used with other technologies.
I agree with you. It just was a question just to raise up some discussions. To be honest, I think beside the sanction list, traditional sanctions list, with the names, surnames, date of births, and so on of the people, we have also to create some kind of a sanctioned list, the sanctioned list of the networks around those people. That's correct. We have to make it harder, and harder. Sometimes different people are using for different proposal the same schemes. A guy from Mexico, and a guy from China, a guy from Russia, from Europe, all of them, they are using the same scheme, the same provider of corporate structures. And using AI, you can find this, overlapping of something, and you can just tie the roots, just find who is doing what. To do it in a very proper way, to emulate, like super emulate, you have to spend a lot of money, and the margin of cleaning the money from, Iran or China or Russia to Europe is then not so feasible, if you're doing like super properly. You start to use the same things, that the other guys is using. It can be burned, and you can just, in the worst case, you can lose, those guys can lose the money, and the government at least will receive some, good sum of money in the treasury that can be spent on whatever, infrastructure or so on.
But that's happening, right? If you look at OFAC and you look at some of the sanctions that OFAC have placed on companies, they've been third-party companies in third-party countries that aren't directly been sanctioned per se themselves. They've been sanctioned because there's intelligence that suggests they are being utilized by third parties who are actually sanctioned to help clean and move money. So especially FATF, right? Countries, regulators are already starting to go after those sort of businesses. But, to your point, like that is part of the criminal network, right? You sort of alluded to what I'd call DNFBPs, right? Designated non-financial businesses and professions, right? That is an age-old tactic, right, for the criminals, right? If I'm Escobar, for example, right, I'm not going to be anywhere near any bank accounts. I'm not going to be anywhere near any corporate structure naming conventions, right? I'm going to use third parties to do that. And what I'm also going to do, I'm also going to use third-party businesses that I trust, right? Which is the accountants, the law firms, notaries, the incorporation formation agents, all those companies, right? There's a business in its own right, a services business for criminal enterprises. And what's utilized by one, I think you alluded to this, right? But what's utilized by one organized crime group, they find a a law firm, for example, that's maybe a family business, right? It won't just be one criminal enterprise using that. You'll have half a dozen criminal enterprises using the same law firm, right? But they're not going to get caught. The law firm's not going to file a SAR on them, et cetera, et cetera. So there's a whole services network that sits around organised crime to allow them to operate. And that's another challenge we've got. It's not just directly the organised criminals themselves, but it's those support structures which, on the face of it, are legitimate people, legitimate businesses, trying to earn a living for themselves. But it just so happens their client base is a criminal enterprises. So that's another challenge we have to think about ourselves as organizations when we're monitoring our customers. The whole KYC piece is not, are you a criminal enterprise, but also, are you supporting a criminal enterprise? That's another question we need to ask ourselves.
You just remind me of the story when you said, like, if I would be Escobar, I will never put my name on a company. So in Eastern Europe, in one Eastern European country, somehow appeared a company, an LTD called Escobar. Those guys just named it for fun.
Yeah.
What was the scope of a company? And when they go to register to open a bank account, they was not able to open a bank account because it was flagged already. We have a lot of amount of data. We have sanctioned list. We have a lot and we mentioned that with help of AI, we can do a lot of things. I think everybody understands where AI is useful here. I mean, simply processing big amount of data, checking the information and so on. And I'm still thinking where AI may be still overhyped. I mean, maybe there's something that we think AI will solve it, but in reality, AI will do nothing. Where do you see that AI is overhyped here in this topic?
AI has a really good use case, and it's really useful, right? And the one area where I think AI there's a fear of missing out. People are like, we need AI, but it's like, well, actually AI solves a use case. AI is use case driven, right? So it depends what you want to solve in terms of the problem, in terms of what AI you utilize. Do you use machine learning? Do you use agentic? Do you use supervised machine learning, unsupervised? Like, there's different types of AI that can solve different problems. I think one thing that there's a misconception on is AI is going to solve the world. It's going to be the golden bullet that's going to literally fight financial crime and stop it completely. Like, that's not going to happen, at least not for over a decade, if not likely longer, right? But AI is a tool that can augment and support good people. Like, you can't replace a bad process or bad governance with AI and expect it to be better, right? It's not going to be better. Right? It's still going to have bad processes and bad governance, which you have to address, right? If you've got really bad staff who are not knowledgeable, who haven't got the experience, and are making really bad, poor decisions, AI can help lead them down the right path, but it can't solve the problem with poor staffing or inexperienced staffing, right? You have to fix that, right? But what AI can do is it can assess big data much, much quicker, much more accurately than any human can. It'll take them maybe months to do the same amount of analysis that a system will do in seconds, if not minutes, right? It can help speed up the investigation, so it can highlight and point investigators in the right direction and direct them into, is this suspicious, is this not? It can provide the data points for them. It can gather data. It can do all that repetitive work that a human would take a long time to do and save a lot of time. But you still have to have the processes in place and the governance that work and are proven and are effective. You still need to hire good people who are knowledgeable, who are experienced in what they do and can make very accurate, precise decisions. So my point here is AI is great at solving a problem. It's a tool, though. It's not a replacement. It's a tool, and it will help guide investigators and KYC analysts to the right answers. At this point in time, technology still needs a human in the loop in most cases, in high touch point critical decision making. It still needs a human in the loop to say, yes, this is suspicious. No, this is not. Yes, that customer risk rating score is the right score. No, it's not. So you still need a good person to make that final decision, output decision, but AI can guide you and lead the way to that. And it's really good at doing that.
Thinking about understand your customer, as you said. Nowadays, a lot of people are willing to use and are ready to use and are using crypto, not because it's shady, gray, or whatever. No, it's because it's simple to transfer, it's end-to-end, you're avoiding all these card schemes, SEPA, SWIFT, and so on. And we're speaking about the good guys who are declaring crypto, who just, keeping everything on the light. They're using crypto. And here, speaking about this topic of KC, of financial crime, crypto is easier to investigate or not? Because from my experience, at least for me, crypto is harder to investigate. Maybe you have a different experience.
I think it depends on the perspective that you're looking at, really. But in some instances, it's easier to investigate, and in other instances, it's harder. And I'll explain what I'm saying here, because ultimately, crypto has a trace, right? You got the blockchain, right? From the very first day that the digital currency was intercepted or created, there's a trace of that. And so every hop, every wallet it's gone into if it's gone into a mixer, if it's gone, what VASP, you can trace that all the way through the blockchain. That's the whole point of a decentralized blockchain, right? You can track it through the current day, where it's been and where it's come from. I think that perception has now died, really. Back in the early days, talking 6-7 years ago, people were like, oh yeah, blockchain and Bitcoin is complete, or digital currency, it's completely non-transparent, and criminals can use it and hide their identity. Like those days are gone, right? You can, VASPs now in most countries have to do KYC. Most VASPs, so virtual asset service providers, have to do transaction monitoring, but they do it on the blockchain. Those days of it's not transparent. I know there's some digital currencies that are still not transparent, but most of them now are. That makes it easier. I think where the challenge comes is with fiat currency, you have the travel rule, right? So if I make a payment to yourself, right, it will say it's come from me, how much money it is, my account number, your account number, and the banks that we're associated with. And maybe there might be a free text message where I've written, what the transaction's for, right? That isn't a payment message. So any fiat transaction you do around the world, there's a centralized sort of transit point, right? So the central banks, things like SWIFT, right? There's a central organization that owns the transfers of these payments, depending on who you're paying, where you're transferring, and et cetera, et cetera. And each of those require a message, right, to be associated with the transaction. The problem with Bitcoin or digital currency is the simple nature of it, it's decentralized, which means no one owns it, right? So the whole implementing the travel rule for digital currency becomes very tricky, because actually who owns that? Who owns what the format should be? Who implements it? Who enforces the format? It's really enforce a format when no one actually owns the format, like Swift, SEPI. You talked about some of these, BACs. There's a central point of ownership for those payment rails. There isn't for digital currency. So you can see there's been a transaction on a blockchain, but it's generally a sort of a code associated with it. And so if you're law enforcement, you then have to go to the VASP where the funds are sitting, where it's come from, and then request the KYC information and all the associated. That takes time, right? So it does prolong the investigation cycle, because that's what you have to do. There's no travel rule information that you can say, oh, here's a payment message and here's all the data that goes with it. It becomes much, much harder. But I think that's the problem with Bitcoin or blockchain or digital currency generally. But the fact is, you can't generally still buy stuff with digital currency. So there's an on-ramp and an off-ramp, right, generally speaking. So it's come from some sort of fiat currency from somewhere. It's either stored or it's transited, and it comes out in another fiat currency, probably in another country, in another currency. So there's always going to be an on and off ramps. And I think that's the important point, is it's being able to track these on and off ramp points, because then you can sort of see source and destination.
How the compliance and the fight against financial crimes will look like in next 5-10 years, wherever. It will be the continuation of finding the balance, keeping the balance, where maybe we will arrive that day when we will woke up and we'll say, hey, everything gone. All the bad guys disappeared, financial crime disappeared, the crime itself disappeared. How do you think it will look like?
I think I made that point earlier on, right? I'm going to wake up one day and have no criminals in the world and no organized crime. In my honest answer, not in my lifetime. We're not going to stop it. And the point I made earlier, right, is supply and demand. All the time someone's willing to buy the goods that the criminals are selling, whether that be drugs, whether that be people, whether that be animals or extracts of animals, whatever it is, there's always to be somebody willing to sell that at the right price. Right? It's the nature of the business. It's the nature of supply and demand. So that's never going to go away. I think where we're going to be maybe in 10 years' time from an ecosystem point of view is I think we would have made it very expensive for criminals. Right? I think there's much more collaboration between financial institutions and private sector cooperation, maybe even like joint monitoring, joint sort of transaction monitoring assessments, maybe KYC databases where different banks share a centralized profile for customers. This is very much like 10 years out, I think, but I think we could move into that space where people's information shared in a central database where it's just validated by different banks. Transaction monitoring is probably done more from a collective assessment. Private sector is probably plugging into that a lot quicker and a lot better. And then I think AI is going to be much more advanced than it is now. I think it'll be able to look at patterns and do pattern analysis much quicker, much more effectively, and much more accurately to say, actually, this looks abnormal for these customers. Having said that, on the contrary, or the counter argument to that is criminals are also going to be utilising AI to try and work out ways to find holes and poke the bear, if you like, and poke where they can sort of get around some of the controls that have been put in place. But I do think we're going to be in an environment that's much more collaborative, much more real-time, faster assessment of suspicious activity, and I think a much more costly environment for the criminals, where it is definitely going to cost them more money to operate, and it may result in a reduction in, not elimination of crime, but I think it could result in a reduction of the supply and demand aspect of the goods. Let's see, right? Let's see. 10 years out. Ask me in 10 years, but
Let's shoot another video in 10 years. Yeah. It was a pleasure to speak with you. It was a pleasure to have this discussion. To be very honest, we don't raise this topic very often at Fintech Garden podcast, and we thought it's time. It's time to speak about this loudly. It's time to, at least to make the first step in this. We still have some topics that we need to cover here in podcast, also in discussions with regulators, discussions in business meetings, like, for example, how the banks or financial institutions has to treat the investigations of crypto. It has to be in a separate stream of checking, bit like from fiat, where it has to be in the same bunch of regulations as fiat is. Well, a lot of things are still need to be discussed. Yeah. But at least today we covered some of the topics, and it was a pleasure to see you here. It was a pleasure to speak with you. And I hope our watchers and listeners will have a lot of questions, where at least they will start to think about maybe some ideas. I'm speaking about the good guys, not the bad guys, who will start to think how to make changes. Anyways, it was a pleasure to see you. Thank you very much for coming.
No, thank you very much. Thanks for having me. And it was a great conversation. I've enjoyed it. So yeah, thank you very much, and hope your listeners enjoy it.